This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In this video, I'll be going over data sets and doing a very quick technical analysis over the SPY for March 3rd, 2026. And with that said, let's go ahead and jump straight into the data. For Monday, March 2nd, we did have the ISM manufacturing data. It didn't really come in hot or cool. We did see the prices come in quite hot compared to the previous prints. Other than that, the rest of the data came in fairly neutral. It was slightly above forecast, but even then, it's really not a major concern, especially when looking at the manufacturing employment. It's still below that 50 mark, which still means that it's in a declining amount anyway. So not a good print in terms of the employment. The prices going upward exactly is not a good print either. So a lot of not so great data. We had President Trump speak, and likely we're going to be having him speak all throughout the week due to the war. Um, there's no other way around that. Uh, Especially when we don't have a lot of data throughout the majority of the week. Um, So yeah, tomorrow, Tuesday, March 3rd, we only have pretty much two FOMC members speaking unless something pops out that isn't being shown within the datasets currently. Again, that could be, like President Trump speaking, something like that. Um, for the Fed speakers tomorrow, I'm not really concerned in the slightest about what either of them have to say. Uh, Really, I'm waiting for Wednesday's data as that's when we have some of the ADP data, and then some of that non-manufacturing data and the beige book. Even though overall, again, the large sum of the data really comes from that 8:30 time slot on Friday. So tomorrow or today, whenever you're listening to this, really not a big data day. Wednesday, probably the second largest data day this week. And then Thursday is pretty tame as well. Friday, big data day. So, all right, that's the data. Not gonna go over the earnings either because there's really nothing very, very concerning for tomorrow's earnings. We do have Broadcom on Wednesday. I'll briefly cover that, but not in this video anyway.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting into the technical analysis. Apologize if I sound sick tonight, by the way. I've been feeling very, very awful since about the last week and a half. It's a culmination of a cold my daughter had and just doing a ton of work with the office, which I'm still not even done. I'm having to repaint my daughter's room and all sorts of stuff. So that's enough of me complaining, but I do apologize for some of the lack of updates with the videos, some of the lack of streams, things like that. I do, want to be able to provide those consistently. So I do apologize for that. With that said, getting into the technical analysis, as always, let's turn on the daily time frame and go over our moving averages and Bollinger Bands. Now, today was a very tricky day, and this might be something I have to, you know, change up the wording a little bit in hindsight after today, or, when we see the price action in the future. However, based on the current moment, today's price action happened almost to the T of what we were expecting. And I know many are thinking that I'm full on bearish right now. Yes, there is massive call opportunity during some of these uh, sessions where Today we were either going to push into that lower Bollinger or we were going to pull all the way up and retest the 5 mile. And the reason why we needed to retest that 5 mile was because we had very, very crucial and key moving averages cross each other. We finally have the 20 mile crossing underneath the 50 mile. That is a very, very bearish indicator. So the level needed to be tested again. And throughout at least the overnight session so far, and even technically within the close today, we had a bearish close. So with the 5 mile currently being at 688.43 on your screen, it might show at 687.30. That's where I'm expecting it to open tomorrow. It might even open slightly under that. But with it being at 688.43, the market closed at 686.38. So technically, we closed a whole $2 underneath the 20 mod today, or underneath the 5 mod today, excuse me. So that does mean that the 5 mod will be pulling back downward. Okay. With the 5 mod pulling back downward, with that level being tested, that means, you know, truthfully, the basement is really starting to open up. And by the basement, I mean the downside. Um, this is the type of movement that we were looking for. We were looking for this 5 mile rejection today. And currently in the overnight, the price is at 682.75. So extremely likely this is that rejection we were looking for. The reason why I mentioned that I might have to, change my words up a little bit in hindsight after the fact, when we see some of the future price action is that with us closing below the 5 mile, technically we closed within the lower bounds of the 5 mile. We can pull all the way back up and retest the upper bounds of the 5 mile. We did not retest that today or, on Monday, whenever you're listening to this. So we still can pull up towards that level. Okay, we're not fully done with the 5 mile yet. However, with the 5 mile being retested, what does that really open up? It opens up the bottom Bollinger. And the reason why it opens up the bottom Bollinger is because, and kind of just stepping back for a moment, we have tested the 5 mile, tested the 20 mile, rejected the 20 mile, and from that 20 mile rejection, we really needed to have a 5 mile retest. And I do believe I made this point very clear in last night's video, is that we needed to have a 5 mile retest. So even with the price pulling down quite heavily today, the buying upside was heavily anticipated, even though we did have that lower Bollinger right there. So now that we have the 5 mile retested, potentially rejected, and if this 5 mile starts becoming a resistance rather than a support, that means that it's going to start pushing us down to this lower Bollinger. From the lower Bollinger or from the 5 mile, that opens up the lower Bollinger downside. If we push into that lower Bollinger downside, again, the current lower Bollinger is at 677.88, so that would push us down basically probably to the 674 range. We do have an inverse cup to close at this 675.78, so that would be a very good level to push into. And, just like we have with standard cups, where at the top of the cup we expect a bullish or a bearish structure to create the handle to the downside. At the bottom of a bearish cup, we expect bullish structure to create the handle to the upside. And we've been seeing this price action very, very heavily in here. I'm going to turn off the moving averages. I'm going to show the drawings and it will be a mess. I apologize. But we see this happening in here, a large buying pushing us into this range. And then from then, it's been an extremely, extremely consistent move or extremely consistent measured move. Um, each bit of buying has been fully uh, met with the exact same range of selling. So if you were to actually measure these candles or these arrows that I have placed here, they are all the same length. So this buying candle to the upside or this buying arrow to the upside, exact same size as this selling arrow to the downside. So 100% measured move, buying to the upside, selling to the downside, 100% measured move, buying to the upside, selling to the downside, 100% measured move, buying to the upside, and now starting to sell to the downside, completing that 100% measured move. Um, if we are to see the entire completion of this move, this means that we will be pushing underneath this white lower consolidation channel range, which we're not there yet, but this is starting to allude towards that price action. Now, we did enter two very crucial ranges of liquidity in today's trading session, and each time we enter into this red range, sort of like each time we enter into this blue range, it creates conditions for a large reversal. However, we have been seeing this starting to taper out very heavily. So, with that tapering out, with this starting to consistently push further and further and further downward, this is really alluding to that this is really turning into a bearish trend with the sorry if you can hear my daughter crying. We're trying to get her upstairs right now. Um anyway, with the 20 MA finally crossing underneath the 50 MA, this is starting to create all the conditions for the beginnings of a bear market. So that's why I do believe that our downside is very large. I made mentions in yesterday's video and many posts today that buying this right shoulder for the downside was an extremely good opportunity. Turn off the and stuff. I want to go to the 4-hour time frame to show this shoulder. It's not entirely done yet, but it does look pretty solid so far. Now, this can turn into a cup and handle towards the upside if we're going to fully break out of this yellow range. However, I'm really not expecting that type of price action at all. We again have the liquidity for this head and shoulders. And I know many are saying that, oh, well, this isn't head and shoulders because this neckline is completely messed up. It's well below the previous neckline. I understand that, but in terms of liquidity, all of the liquidity we need is here. All we need right here is further bearish downside. That can be in the form of a head and shoulders. This one would be a little more difficult. I don't fully expect a head and shoulders like that. The more reasonable head and shoulders, and to fully complete this right shoulder on the larger time frame would be to pull upward, retest that 5 mile level once again, see the upper bounds of that 5 mile retested, push down, retest the lower bounds, and then pull down to that lower Bollinger Ring. Um, Multiple scenarios. Now, let's just take a look at the hourly time frame. I want to see if there's anything specific I see here. Again, just a lot of bearish structure, a lot of failures of bullish structures, and um, again, the only thing that's potentially bullish here is that this can turn into a cup and handle for the upside, but we're still not out of the woods yet, even with that, if that turns into the cup and handle towards the upside, because again, we would be able to create the conditions for that right shoulder, push downward, and then, be within that lower Bollinger range. So I am fully expecting the downside here. Um, But I know that many are expecting a lot of buying to start picking up as well. So I don't want to fully rule that out. Um, We do see the ADL extremely, extremely high. However, let's take a look at the HIG. The HIG has been selling off quite drastically. So that is, one of the leading signals that we're really looking for that selling is going to start picking up. Okay. Um, if you were to do a dual chart with HIG and the SPY, you would be able to correlate probably almost 100% of the sell-offs with HIG's price action. So HIG starting to sell off, not a good signal. And we hit a very crucial level within liquid that I've been looking for, which is that 20 mile range. Um, this is starting to sell off, and that is telling us that potentially, you know, equities can be heading downward. That is a very, very large concern. Another large concern is that the USD JPY is extremely, extremely elevated again. It's pushing up towards this 158 range. Um, Again, going over the weekly time frame. Sorry for some of these other drawings. I want you to just pay attention to these lines to the downside though, is that these were those unwinding events, and each time the yen pulled up towards that elevated range, well, the USD JPY, that means that the yen is dropping. It has always caused the Bank of Japan to have to unwind positions very, very drastically. And I don't think that's going to change currently. We still see, let's see, the FXY. Many were saying today that it was just the dollar rising. However, we saw that the FXY was actually dropping today, which means that the yen was losing strength once again. That is a very, very large signal that this can create a major unwinding event. Okay. Within Bitcoin, we are still struggling to see. I don't want to create a buy order. Hold on. We are still struggling to see Bitcoin overcome this downside range. It did not create this inverse cup to the downside. However, it's still not breaking this consolidation. And this consolidation has been going on for quite a while now. The previous consolidation range was going on all the way since November. We finally broke through that range and are still sitting well below that range, consolidating below that. So Bitcoin, again, not out of the water either, or out of the woods. And that does allude to equities not being out of the woods. So overall, um, I'm not bullish right now. I do have puts positioned for April currently. I do fully anticipate those puts to probably do very well. Again, I'm keeping my eyes on this 646 range. There's a very large gap for liquidity there. And coming into March, we do have the very, very important um uh SPY dividend. Sorry, my daughter's crying. I have to end this video very soon. We have the very, very important SPY dividend this month, which, it happens every 3 months, so 4 times a year. That SPY dividend usually takes a whole $1.75, $1.80 off the top price. Now, that is still about 3 weeks out. Let's see, that's going to happen on the 20th. Um, so, still almost a full 3 weeks out. However, that is occurring this month, and with that occurring this month, that does create the conditions for, really pushing into that downside. So there's a lot of very bearish factors in play right now, and I do think that with today's price action and not being able to claim that 5 mile range, that was very, very indicative of, continuation within this bearishness. So that's tonight's video. Um, Really, my expectations out of tomorrow. We don't have a lot of data. We have more data coming on Wednesday, so we may not see a whole lot of buying or selling until that happens. We might just see continuation within the selling because technically the trend is pushing into the bearish side. So with the bearish trend on these days without data, generally we will see, the algorithms just focused on a selling stance rather than on a buying stance when the moving averages are in a bear or are in a bullish positioning. So keep that in mind. With that said, thank you for watching. Have a great day, have a great night. I hope your trades go very, very well, and I will talk to you in tomorrow's video. And I will be streaming in the morning on Wednesday. I did not get to do that Monday. And my health has still been, you know, going through a lot. So, okay, I'll stop rambling. Have a great day. Have a great night. Thank you for watching. Thank you for subscribing. And I will talk to you in the next one. Take care, everybody.